You step onto a salt-stained driveway, and the air feels heavier than the humidity. The sky is a bruised gray, wind pushing sheets of rain sideways like the state itself is trying to wash something away. You twist the key in a front door you once thought would be your safety, your equity, your retirement, your Florida dream. But inside, there's a different sound now. Silence, interrupted only by the buzz of an insurance renewal notice you already dread opening. Premiums that used to feel annoying now feel brutal. And the moment you whisper the word sell, the market answers with a cold, mechanical truth. Buyers vanish when insurance becomes a second mortgage. Across Florida's coastline, the real estate story is unraveling, not from a lack of sunshine, but from a storm of costs and risk that's crumbling demand. Inventory is swelling, price cuts are multiplying, and homeowners are getting trapped in place. Subscribe to Coastal Market Watch right now because the next 10 minutes are a countdown through the cities where the exit door is narrowing, and number 1 is the most devastating. Number 10. Jacksonville Beach, Florida. You roll in with the ocean on your left and pastel homes on your right, the kind of place that used to feel like affordable coastal. Jacksonville Beach carried a reputation as the laid-back alternative to South Florida, until the math started breaking buyers' confidence. Back at the peak, the market surged in 2022, when coastal demand spiked and remote work poured new money into Florida. Prices climbed into the upper tier as buyers chased sand, space, and no winter living. Now, the shift is concerning. Redfin tracking shows median prices slipping from roughly $650,000 at the 2022 peak to about $560,000, a 14% drop, while days on market stretch from around 20 to roughly 55. Zillow figures show buyers taking longer to commit as monthly costs jump. Local MLS reports indicate inventory is up about 40% year-over-year, and roughly 1 in 3 listings has taken a price cut. Sales volume is down near 20%, and price per square foot has softened about 8%. Even rents are wobbling, with vacancy edging higher and concessions creeping back in. Source: what's driving it? Insurance is the first punch. Many owners report renewals jumping into the $4,000, $7,000 range, and flood coverage adds more weight. Higher rates finish the job. As you leave Jacksonville Beach behind, the market feels like wet sand collapsing underfoot. Still standing, but sinking fast if costs keep rising. Number 9. Daytona Beach, Florida. You enter Daytona with wide skies, racing history, and that gritty Atlantic energy. For years, it wore the label of cheap beach town, a place where buyers thought they could still get coastal without paying Miami prices. That perception is cracking. The market's momentum peaked in 2022, driven by pandemic migration and investors hunting cash flow rentals. Daytona's affordability story fueled bidding wars that would have sounded insane just a decade earlier. Now the slowdown is troubling. Zillow market figures show values cooling, and Redfin-style trend lines across Florida show longer timelines and swelling selection. Median pricing has slid from roughly $360,000 in 2022 to near $305,000, about a 15% decline, while average days on market have roughly doubled into the 50-70-day range. Inventory is up around 45%. Price reductions hit about 34% of listings, and closed sales are down roughly 18%. Investor purchases have faded as financing costs bite, and the rent side is losing heat. Vacancy rises near 6% in some pockets, and asking rents flatten. Source: the pressure points are simple and crushing. Wind risk, rising insurance premiums, and a buyer pool that's far more payment sensitive. Property taxes add another layer, often 1.2%, 1.6% effective rates. As you pull out of Daytona, it feels like the track lights dimming. Less roar, more hesitation, and that hesitation spreads south. Number 8. St. Petersburg, Florida. You cross the bridges into St. Pete and the water glitters like a postcard, until you notice the for sale signs stacking up. This city used to be the easy win, artsy, walkable, booming, and still cheaper than Tampa's hottest zip codes. Not anymore. St. Pete hit a modern peak around 2022, powered by remote workers, lifestyle buyers, and a flood of demand for anything near the bay. Condos and renovated bungalows became status symbols. Today, it's alarming. Florida-wide Redfin trend data shows demand thinning and marketing time stretching, and the Gulf Coast is seeing it first. Median prices have sagged from roughly $520,000 in 2022 to about $435,000, near a 16% drop. Days on market climbed from about 18 to roughly 60, and local MLS reports indicate inventory up around 55%. Around 36% of listings have reduced price at least once. Sales volume is down about 22%, and price per square foot has slipped roughly 10%. Condo fees and insurance surcharges are pushing monthly payments into the danger zone, and rental vacancy is rising towards 7% in some buildings. Source: the drivers are brutal. Higher HOA dues, special assessments, and insurance premiums rising into $5,000, $10,000 territory for some properties. As you leave St. Pete, the market's glow fades, like a neon sign flickering, because buyers don't fear the beach. They fear the bill. Number 7. Fort Myers, Florida. You arrive where palm fronds still look wind-bent in places, and the coastline carries a memory of storms. Fort Myers once felt like a bargain gateway to Gulf living, a magnet for retirees and investors. But the market is now hemorrhaging confidence. In 2022, Fort Myers rode a high: migration, cheap money, and endless demand. Prices pushed to peak levels as buyers believed coastal appreciation was a one-way elevator. Now it's worse. Realtor.com has highlighted Florida as a cluster of cooling markets, and Fort Myers sits right in the blast zone of affordability and risk perception. Median prices have dropped from roughly $430,000 in 2022 to about $350,000, close to a 19% slide. Days on market expanded from around 15 to near 70. Inventory is up about 60%, and price reductions are widespread, often 40% of active listings. Closed sales are down about 25%, and price per square foot is off around 12%. Foreclosure filings are rising in Florida overall, and local distress signals are appearing as payments reset and costs surge. Source: Fort Myers has a specific pain: post-storm rebuilding costs and insurance renewals that can jump into 5 figures for coastal exposure. Add property taxes near 1.3%, 1.8%, and buyers freeze. As you drive out, the market feels like drywall after a flood, still standing, but soft, sagging, and ready to collapse under pressure. Number 6. Palm Coast, Florida. You enter Palm Coast under a canopy of pines and coastal breezes, a master-planned feel that used to promise stability. It was long treated as a safe Florida bet, not too flashy, not too risky, until the costs started behaving like a storm surge. Palm Coast's run peaked in 2022, when buyers fleeing expensive metros drove demand inland from the shoreline, pushing values sharply higher. Growth was fueled by remote work, low inventory, and cheap mortgages. Now the data is troubling. Redfin's statewide patterns show longer selling times and more negotiating power for buyers, and Palm Coast reflects the shift. Median prices have eased from about $410,000 in 2022 to roughly $335,000, an 18% decline. Days on market climbed from around 17 to about 65. Inventory is up about 50%, and approximately 35% of listings show price cuts. Sales volume is down roughly 20%, and price per square foot has softened around 9%. Rental vacancy is rising near 6%, and rent growth has evaporated, undermining the investor thesis. Source insurance remains the hammer. Wind risk pushes premiums higher, and flood zone proximity adds extra cost. Higher rates mean the payment shock is crushing. As you leave Palm Coast behind, the market feels like a shoreline dune, shaped by wind, vulnerable, and steadily being carved away. If you're finding this data-driven analysis useful, like the video and comment which city surprises you most. Your engagement helps us continue this research. Number 5. Sarasota, Florida. You pull into Sarasota and everything looks expensive on purpose. Marinas, galleries, manicured streets that once screamed, "Forever demand." Sarasota was considered resilient, almost immune. That myth is cracking in real time. The market peaked in 2022, when luxury buyers and snowbirds flooded in. Sarasota became a trophy for lifestyle, remote executives, and second-home wealth chasing the Gulf. Now the slowdown is alarming. Redfin market data has shown Sarasota prices down sharply year over year in recent periods, with the median sale price around $613,000 and meaningful declines. Days on market have stretched into the 50-80-day range, and local MLS reports indicate inventory up roughly 60%. From a 2022 peak near $760,000, a median near $613,000 signals about a 19% pullback. Roughly 38% of listings have cut price. Sales volume is down about 25%, and price per square foot has dropped near 10%. Investor activity is thinning as cap rates fail to beat the new cost of money, and rental vacancy creeps towards 7%, forcing concessions. Source: the drivers are brutal and specific. Insurance renewals climbing into $6,000, $12,000, condo assessments, and a buyer base refusing to absorb endless fees. As you exit Sarasota, the market feels like a perfect glass sculpture. Beautiful, expensive, and suddenly one crack away from shattering. Number 4. Naples, Florida. You arrive in Naples where wealth used to feel like weather. Constant, predictable, unbeatable. The streets glow with luxury, and for years the market felt untouchable. But now, even Naples is unraveling. Naples peaked in 2022, when affluent buyers and investors treated coastal property like a vault. Limited supply and prestige pushed prices to heights that looked permanent. Now it's more alarming. Local board statistics and Florida trend lines point to rising inventory and slower absorption. Median pricing has slipped from a 2022 peak near $825,000 to around $670,000, roughly a 19% decline. Days on market have expanded from about 14 to near 75. Inventory is up around 70%, and price reductions hit roughly 40% of listings as sellers chase a shrinking buyer pool. Sales volume is down about 28%, and price per square foot has softened around 11%. Luxury rentals are no longer guaranteed, and vacancy pushes towards 6% in some seasonal segments, weakening the second home pitch. Source: the causes are crushing. Insurance renewals that can surge beyond $15,000 for higher-risk properties. Property taxes often exceeding $10,000 annually on upscale homes. And rate-driven payment shock. As you leave Naples, the market feels like a high-end ship taking on water. Still elegant, but suddenly fighting gravity. Number 3. Tampa, Florida. You approach Tampa with skyline reflections on the bay, cranes in the distance, and the echo of a boom that felt unstoppable. Tampa was the next big thing, a migration magnet with jobs, culture, and relative affordability. That era is collapsing. Tampa's peak came in 2022, fueled by tech hiring, pandemic-era relocations, and cheap debt. Buyers believed demand would outrun supply forever, especially near the water. Now the downturn is brutal. Realtor.com has projected Florida softness into 2026 and highlighted pressure across major metros. Median prices in the broader Tampa region have pulled back from a 2022 peak near $420,000 to around $345,000, about an 18% decline. Days on market expanded from roughly 12 to about 60. Inventory is up around 55%, and approximately 37% of listings show price cuts. Sales volume is down about 24%, and price per square foot has dropped around 9%. Investor purchases are down near 30%, and rental vacancy has pushed towards 7%, with rent growth evaporating and concessions returning. Source: Tampa's drivers include rate shock, post-pandemic demand fade, and insurance creep spreading inland from coastal risk zones. Property taxes near 1.2%, 1.7% deepen the payment squeeze. As you leave Tampa behind, the market feels like scaffolding without a building, tall, exposed, and wobbling in the wind. Number 2. Miami, Florida. You enter Miami where heat rises off the pavement and glass towers gleam like promises. Miami's brand was always stronger than its fundamentals: global money, endless demand, status. But now the reality is undeniable. The market is cracking under its own weight. Miami's peak was 2022, when luxury surged and buyers treated condos like currency. Pandemic migration collided with international demand, pushing prices to the edge of reason. Now it's devastating. Redfin data shows Miami prices down in recent periods, with selling timelines stretching. From a peak median near $725,000 in 2022 to roughly $600,000. That's about a 17% decline. Days on market have stretched into the 90-110-day range. Inventory is up around 50%, and price reductions hit about 40% of listings. Sales volume is down roughly 26%, and price per square foot has fallen near 10%. Condo fees and insurance surcharges are crushing, and rental vacancy is climbing toward 8%, forcing landlords to offer months free. Source: the drivers are relentless: insurance volatility, condo assessments, and buyers refusing to underwrite endless risk. In a city built on confidence, confidence is evaporating. As you leave Miami, the market feels like a high-rise in fog, still towering, but suddenly hard to trust. Number 1. Cape Coral, Florida. You cross into Cape Coral, and the canals look calm, too calm, like the surface of something hiding damage underneath. This city was once the investors' playground: waterfront access, new builds, endless listings that moved fast. Now it's the most severe example of homeowners trapped by a collapsing equation. Cape Coral peaked in 2022, when demand exploded and new construction raced to keep up. Investors poured in, believing short-term rentals and appreciation would cover any risk. Now the numbers are catastrophic. Redfin market tracking shows pricing softness and slower absorption. Median prices have fallen from roughly $450,000 in 2022 to about $345,000, a 23% drop, and days on market have ballooned from around 12 to nearly 80. Inventory has surged about 75%, and roughly 45% of listings have cut price, sometimes multiple times. Sales volume is down around 30%, and price per square foot has dropped about 14%. Investor buying is down near 35%, and rental vacancy is pushing 8%, destroying the cash flow narrative. Meanwhile, Florida distress signals are rising, with foreclosures increasing statewide, tightening the fear cycle. Source: the root cause is brutal: insurance renewals and flood costs escalating into $8,000, $15,000 for some owners, plus oversupply from relentless building. That's a trap. As you leave Cape Coral behind, the market feels like a seawall cracking. Once it splits, the collapse isn't loud at first. Then it's unstoppable. You just traveled down Florida's coast from concerning cracks to a devastating trap. 10 cities where the dream of selling is colliding with the reality of insurance, rates, and evaporating demand. The pattern is unmistakable. Rising premiums and risk perception are crumbling buyer confidence, while swelling inventory and price cuts expose how fragile pandemic-era pricing really was. This isn't just a housing slowdown. It's a cost of ownership crisis. And in coastal Florida, costs are behaving like a storm that won't pass. If you own in these zones, the window to act is narrowing. If you're buying, the leverage is shifting, but only if you understand the risk. Subscribe, like the video, and comment which city you think is next to unravel. Until next time, stay sharp, Stay data-driven and protect your downside.